The U.S. economy has entered 2025 at a fairly sound pace. In our view, consumer balance sheets are healthy, the job market appears sound, and we look for inflation to further ease over the months ahead. Overall, we look for the pace of economic growth to decelerate, but modestly. However, the most notable economic and market uncertainty at this time is tariffs. This is a highly fluid situation, so we won't go deep into current details as they seem to be changing by the hour. But let's begin by looking at what a tariff is and what it might mean for investors in the economy. A tariff is a tax on imported goods that is paid by the importing entity to the federal government. This incremental tax raises the total cost of the imported item. Thus, tariffs are meant to encourage the importer to either find a domestic source or a source from a different country. Tariffs can be imposed broadly on all goods, or on specific goods such as steel, or on items originating from a specific country. While tariffs have the objective of protecting domestic industries and raising tax revenue, they can also bring side effects. First, there is the risk of retaliatory tariffs. This means that countries that are the target of tariffs may respond by implementing tariffs against the U.S. Second, tariffs, depending on their magnitude and the cost structure of the product affected, could lead to higher inflation as companies pass along the added cost to the end consumer. Lastly, tariffs could benefit some domestic industries as they force more businesses to source domestically, but they're more likely to slow the overall pace of economic growth as higher prices act as a drag on consumer spending power. Overall, tariffs are likely to remain a key uncertainty over the next several quarters. Financial markets will be paying close attention to their scope, magnitude, and longevity to gauge their potential impact. Broad tariff implementations could dampen economic growth and put upward pressure on inflation, which would very likely be a market negative and could contribute to added market volatility. Still, it's our view that in most cases, tariffs implemented over the near term are likely to be temporary rather than a lasting change in U.S. trade policy. If you're worried about how tariffs could impact your portfolio, please contact your Ameriprise financial advisor. Thank you.